Hello everyone, thanks for joining us. The purpose of this video is to assist you in understanding the two most important financial statements. One day, a friend of mine told me that there is no net profit without profit and loss statement. I told him, yes, you are right, that the profit and loss statement is necessary to calculate net profit. However, I believe that net income or net profit can also be calculated through the balance sheet. The balance sheet provides information about the asset, liabilities, and equity of the company, which can be used to calculate the net income or net profit of the company. Stay with me to find out more. Here is an explanation of bookkeeping before we begin. Bookkeeping is the process of recording and classifying financial transactions in a systematic manner in order to maintain an accurate record of a company's financial activities. It involves recording and updating information about a company's financial transaction in ledgers and financial statements, which help in determining the company's financial position and performance. The ledger account is probably familiar to most of you, but let's see the meaning of the ledger account. The ledger account records the transaction of a business and it has two sides. It is like letter T. The left-hand side is known as the debit side and the right-hand side is known as the credit side. An increase in the value of an asset, drawings, and expenses represents a debit entry. On the other hand, a decrease in the value of an asset, drawings, and expenses represents a credit entry. A decrease in the value of liability, capital, and income represents a debit entry, while an increase in the value of liability, capital, and income represents a credit entry. To maintain a record of all sales, revenue, purchases, and expenses incurred by a business, transactions are recorded in an accounting system. Upon recording transaction in an accounting system, the generation of the two key financial statements, the balance sheet and income statement or profit and loss statement, will become possible. Now let's talk about financial statements. As you may know, financial accounting consists of two primary statements that provide information about a business. Balance sheet, the statement of financial position. The balance sheet of a company is a financial report that displays the company's assets, liabilities, and shareholders' equity, providing a snapshot of the business as of a specific date, typically the end of a month or year. This date indicates the end of the period covered by the profit and loss statement. The balance sheet is divided into two sections. The left side shows the company's assets, which are resources owned by the company and can be converted into cash. The right side shows the company's liabilities, which are obligation that the company owes to others, and equity, which is the residual interest in the asset of the company after liabilities are deducted. The balance sheet equation is asset equal equity plus liabilities. This means that everything the company owns, asset, is financed either by borrowing money, liabilities, or by using money provided by the owner of the company, equity. The statement of profit and loss. This provides a concise overview of the business, income and expense transactions during a specific time period, or we can say it shows the performance of the business. Profit or loss statement allows investors and analysts to see how much money a company is making or losing, as well as its ability to generate profits. The income statement starts with revenues, sales revenue, or the money a company makes from its operations. This is followed by the cost of goods sold, cost of sales, or the expenses associated with producing and selling the company's products or services. The difference between revenues and the cost of goods sold is gross profit. After gross profit, we have sundry income. Refers to income not derived from the business primary trading activities. Then we have the expenses, are the day-to-day running costs of the business. Finally, after expenses are deducted, net profit or loss remains. As I said before, we can find out the net profit in two different ways. One is from profit or loss statement, and another one is throughout balance using the accounting equation. Total assets minus total liabilities is equal total equity. Once we know the total of equity, we can find out the net profit. Now let's see a short exercise to summarize what we have discussed so far.
Exercise. Kim Buckmiller started a business as an appliance dealer on the 1st of January 20XX and made the following transactions. A. Started the business with £6,000 in cash opening capital. B. Bought 3 dishwashers for £600 each, on credit from LG. C. Sold 3 dishwashers for £790 each on credit. D. Spent £2,000 on a second-hand van for use in the business. E. Paid rent of £300 cash. F. Paid LG £1,200 on account. G. Received £790 from the customer. H. Drew £100 in cash out of the business for his own personal use. After 6 months, Mr. Miller wanted to know the value of equity, income and expenses.
Now let's enter the transaction into relevant ledger accounts. So for the first transaction A, we have £6,000 in cash. It represents an asset of the business. This is therefore a debit in the cash account. On the other hand, the business has a liability because it owes the owner. So this liability will be a credit in the capital account. Line B, we have 3 dishwashers for £600 each. Therefore, £1,800 will be debited to the inventories account. The business didn't pay yet, so it represents a liability. This liability will be a credit in the payable account. the asset increase and the liability increase as well. Line C, we have credit sales. The business sold 3 dishwashers for £790 each. Therefore, £2,370 will be debited to the receivable account. On the other hand, the sales represent income, so this income will be credited to the sales account. We have 2 more entries that is required in this transaction. Therefore, a debit entry is required in the cost of sales account, £1,800, and a credit entry is required in the inventory account, £1,800 as well. Line D, we have a purchase of van. Van is a non-current asset of the business to be used for the long term in the business. So a debit entry of £2,000 in the van account is required. On the other hand, the business has paid £2,000 out of the cash account. The asset decrease and a credit entry in the cash account is required. Line E, the business paid rent of £300 cash. The rent is an expense. This expense will be debited to the rent account. On the other hand, the business has paid £300 out of its cash account. Therefore, the £300 will be credited to the cash account. Line F, the business paid the supplier. Therefore, payable account must be debited and cash account must be credited by £1,200. Line G has received £790 from the customer, so cash account is debited by £790 and receivables account is credited by £790 as well. Line H, the business has paid £100 out of the cash account, so a credit entry in the cash account is required and debit the drawings account because the owner has made drawings of £100. This is a reduction of capital, but a separate drawings account should be used. So let's start with profit or loss statement. We have £2,370 which came from sales account because company sold 3 dishwashers for £790 each. And then we have £1,800. This amount came from inventory because the company bought 3 dishwashers for £600 each, and then when we sell, or when the company sell, we credit inventory account, and then we debit the cost of sales account. Okay. On the other hand, we have the company paid rent of £300 cash, and then we don't have any more income or expenses. So now we are ready to calculate net profit, which is £270. Okay. In the equity section of the balance sheet, this amount will be added.
Now, before elaborate the balance sheet, let's calculate the balance on the account and bring the balance down as a single amount. So let's start with cash account. The first step is to insert the higher total as the total of both sides. In this case the higher total is £6,790. The second step is to insert a balancing figure on the side of the account with the lower subtotal. This is referred to as the balance carried down BAL-CD for short. As you can see on the right side beneath the subtotal £3,600 we have the balance carried down BAL-CD for short, which is the difference between the subtotal of the left side and subtotal of the right side. The balance figure is £3,190. The third step is to insert the balance carried down figure £3,190 beneath the total on the other side of the account. This is referred to as balance brought down, BAL-BD for short. This balance remain in the account.
To find out the balance on payables and receivables, we used the same process. So now let's complete the balance sheet. So we have assets. Inside assets we have non-current assets. We have just one account, is van, £2,000. And then inside current assets we have 3 accounts. First one is inventories, which is null, okay, because business bought and sold 3 dishwashers. Second one is trade receivables, £1,580. Cash in hand, £3,190. Okay. Total assets is £6,770. Okay. Now inside equity, okay, we have 3 accounts. The first one is capital. We have 6,000. Net profit, we have £270. This amount came from profit and loss or loss statement, but I will show in a moment how to find out net profit through balance sheet. So stay with me, okay, to find out more. Less drawings, borrowing from owners, okay. We need to take out this amount, yeah, from capital. So drawings reduce the amount of capital, don't forget. And the total equity is £6,170, okay. Inside current liabilities, we have trade payables 600. So total liabilities is £600. Okay. Total equity and liabilities is £6,770. So this amount, this total equity and liability, must be equal total asset £6,770. Okay. It means that the accounting is balanced. Now let's find out net profit through balance sheet. For this we need to use the accounting equation, which is assets equal equity plus liabilities. And then we need the equity, so equity equation, so it will be assets minus liabilities is equal equity. So now we need to replace £6,770, where we have assets, minus £600, where we have liabilities, so it will be equal equity. And then equity is £6,170. Okay. Now inside equity, okay, we have capital, net profit, drawings, and so on. now we're gonna we need to replace where is capital, net profit, drawing. So the each amount. So we need net profit equation. So it will be 6,170 pounds minus 6,000, which is the value of the amount of capital, plus drawing. So equity is capital plus profits minus drawing. We need to take the drawings to left hand. So when we do that, it's come positive. Okay. And then net profits will be then 270 pounds. Okay. This is how we find out the net profits through balance sheet. We need to use the account equation. But if you do profits or loss statement first, we don't need to use that. So we have already the net profits came from profit and loss statement. So thank you for watching. Don't forget to like and subscribe. Thank you. Bye bye.